Happy New Year to you, Mickey. Boy, that market really took off right after the new year. What gives?
Happy New Year to you as well, David. It was surprising because, there was kind of talk that we may not get the end of the Santa Claus rally, and the new year starts off with a bang. A little more follow through from the new tax law, and a lot of technical trading breaking through that 25,000. It's just a lot of feel-good emotions out there in the market, and it just keeps going higher. The trend is our friend.
You're right, Mickey. The trend is indeed our friend. I was really surprised considering that the jobs report came in a bit muted, and I would have thought that the market would have reacted a little negatively. It didn't seem to matter. What did you see?
Well, the first thing the market did act negatively at first with the futures. They actually were trading much higher, then they dropped down a little bit. But, here's the reality. The economy is pretty much at full employment, so finding new jobs is always going to be tough. Second, the big reason the market took off was the report was not as good as expected, but not bad enough to change the Fed's outlook on how they're going to do interest rate changes. So the plan is right now 3 interest rate hikes for this year. If the jobs number had been really bad, then all of a sudden people start looking at this jobs report and say, wait a sec, we could get a change in policy. That would affect the market. The report was not that bad, and it doesn't change anything, so the market can just go back on its merry way and continue going higher, which is exactly what it did.
All good points. I appreciate it. Okay, for the next couple of weeks, what should we expect? What are the kind of things that might make news?
It seems pretty muted right now. It was interesting. A lot of technical news as we broke through 2,500 on the Dow, 7,000 on the NASDAQ. Still reading, there's a lot of investors on the sidelines. I think we're going to get some volatility here because we did go through some key technical levels. And it's not uncommon to get some selling in January as you get some profit taking. Again, we're just in a whole new territory where the market just keeps on going. Every day you see one analyst saying this market's cheap, another analyst saying, watch out, it's overdone. So, my crystal ball is not working. And what I tell my clients is we're just going to stay in this trend until we get definite signs that the trend is changing, and then we slowly start changing allocations. But, you can't time the market. We've talked about this over and over. You cannot time this market because it just keeps doing whatever it wants to do. And the trend has been up for a long time, and right now it's just going to continue going higher until it changes. And I'm not stepping out on a ledge there because I don't know.
Well, I think that then the big question, and it really leads to how people get a hold of you, is if they're thinking about waiting for a time to get into the market, if you're not going to time the market when you're in it, you probably don't want to time the market to start. Now is as good a time as any to start investing. Mickey, if you agree with that one, give everybody your contact information so they can get a hold of you.
Yeah, and you're absolutely right. Just because you're waiting for that pullback, if the market goes up another 15%, and then we get a 5% pullback, you still miss 10%. And there are ways you can start investing slowly, systematically, and maybe we catch some pullbacks. But email me directly, Mickey, Mickey, at Envestim, ENVESTIM.com. Follow us on Facebook on our Envestim page, and follow us on Twitter at Investim1.
Here we go for 2018, Mickey. Good to talk to you as always. We'll talk next week.
Sounds great, David. Looking forward to it.